What's up, everybody? Welcome back to another episode of Brains, Beards, and Blockchain. I got Steven the Calculator Guy here. I'm Professor Keith or Professor Simp, however you want to call me. I don't mind. Some people just call me Keith. I prefer whatever you prefer. Got some interesting stuff to talk about. I believe Steven's going to go into some really interesting DeFi option type things that we have. It's really cool. I like the concept a lot. We'll go over the charts on those said assets, and we'll go over some other said assets too. But first, I want to hand it off to one of the smarter dudes in the space. I don't care what anyone says; that's just the facts. And let's hear what one of the smartest, bald-headed, bearded guys in the world has to say. Fire away, sir.
There's some hair on the side. Yes. Thank you so much for the introduction. Glad to be here. So basically today I want to talk about options in DeFi. So if you've seen my videos, I've been talking about this for a while now, but it's a way to get yield on either your assets with covered calls, selling covered calls, or on your stable coins, which is really interesting, with cash secured puts. So we're going to look at Friction Finance as a good example because they have decent analytics. Now, there are tons of options protocols out there. And if you're interested in options protocols, one thing I recommend doing is going to DeFi Llama, clicking categories, then clicking options, and you can see all of the different options that they're all available. But I like Friction because of the analytics and because it's allowed in the US. There's another Solana options protocol called Katana, but if you're in the US and don't have a VPN, it's inaccessible to you. So what we're looking at right now is these are cash secured puts. Effectively, what that means is you give cash, you stake your cash, you contribute your cash, you collateralize your cash, and you're getting a yield on that. In this case, up to 40 something percent, which is pretty good for USDC.
That's great.
And the platform will do options, will sell put options on that cash. A put option basically means like if the price goes down to it's down below what they call a strike price, then you're obligated to you're obligated to purchase the asset at that price. Now, that's not what's going to happen with these because these are cash settled. But effectively, you stake your stablecoin and you're going to get a yield on it. And actually, Keith, can you pull that up one more time really quickly so we can, so you can see that in this case, these are Luna puts, and the squiggly line, the sort of chart, has never touched the strikes, which are the dotted lines underneath them. Now, granted, this is not much data. It only goes back to February. But in this case, every single one of these weeks would have been profitable for the individual running these puts. Now, if you scroll down, Keith, to the bottom, you can see there's a lot of decent analytics. Keep going to Vault Performance. You can see each one of the weeks and what the return was. So in each one of these weeks, you're getting between 0.2% and almost 1% return per week, which is rather incredible for these vaults. So they're one of the many plays in DeFi. Now, I know DeFi may be turning around, or crypto may be turning around, but whenever crypto is crabbish or even a little bearish, these are some options to continue getting yield and not just watch your bags go down or not just sit on the sidelines in stables. So there are options for virtually every major blue chip from AVAX, Solana, Bitcoin, Ethereum, etc. And it's one thing you can do. And now I want to talk to Keith about these because, he's from TradFi. He knows finance. He knows options. And I want to know from a more professional options that they're all available. But I like Friction because of the analytics and because it's allowed in the US. There's another Solana options protocol called Katana, but if you're in the US and don't have a VPN, it's inaccessible to you. So what we're looking at right now is these are cash secured puts. Effectively, what that means is you give cash, you stake your cash, you contribute your cash, you collateralize your cash, and you're getting a yield on that. In this case, up to 40 something percent, which is pretty good for USDC.
That's great.
And the platform will do options, will sell put options on that cash. A put option basically means like if the price goes down to it's down below what they call a strike price, then you're obligated to you're obligated to purchase the asset at that price. Now, that's not what's going to happen with these because these are cash settled. But effectively, you stake your stablecoin and you're going to get a yield on it. And actually, Keith, can you pull that up one more time really quickly so we can, yeah, so you can see that in this case, these are Luna puts, and the squiggly line, the sort of chart, has never touched the strikes, which are the dotted lines underneath them. Now, granted, this is not much data. It only goes back to February. But in this case, every single one of these weeks would have been profitable for the individual running these puts. Now, if you scroll down, Keith, to the bottom, you can see there's a lot of decent analytics. Keep going to Vault performance. You can see each one of the weeks and what the return was. So in each one of these weeks, you're getting between 0.2% and almost 1% return per week, which is rather incredible for these vaults. So they're one of the many plays in DeFi. Now, I know DeFi may be turning around, or crypto may be turning around, but whenever crypto is crabbish or even a little bearish, these are some options to continue getting yield and not just watch your bags go down or not just sit on the sidelines in stables. So there are options for virtually every major blue chip, from AVAX, Solana, Bitcoin, Ethereum, etc. And yeah, it's one thing you can do. And I want to talk to Keith about these because, well, he's from TradFi. He knows finance. He knows options. And I want to know, from a more professional perspective, what the risks might be.
So in a traditional option, for instance, if you use Charles Schwab or Fidelity or Robinhood or whatever you're doing, if you're going to short the market and buy a put, then you're betting on the price to go down. You would essentially be saying, hey, I think Tesla is going to go down, and I don't want to sit here in cash, and I can't buy futures because that's not allowed. So I want to bet on the price to go down. How do I do that? You would buy a put option, and the put option would have, let's be hypothetical, let's say the price of Tesla is 300. The put option would have a strike price of 280. Okay, so you wouldn't be in the money until it hits 280 because you've bet on the market to go down. All right, once it hits 280, anything less than 280 in your allotted time of the option that you bought, whether that be a monthly, a weekly, a yearly option, whatever it is, you'd make the profit on. All right, and you can stay in it as long as you want until your time limit runs out. Often you hear people say, well, hey, you know, options are coming up here soon, and they're going to, you know, option times are about to run out, and we're going to see. You're going to hear that kind of lingo constantly. You know, historically, Elon Musk had a bunch of stuff sitting in options waiting, and he's put on Twitter, hey, I'm going to sell. Should I sell, everyone? The chart was obvious that he was going to sell. Of course he was going to do that. You think he's an idiot? He wants his money. He's a bazillionaire. He's the richest man in the world. He didn't get that way on accident. Okay? So the difference here and what Steven just said is you're selling put options. You're not buying put options. So there's a slight difference there. Okay? Traditionally on an option, you would be buying the put to bet on it to go down, or you would buy a call option to bet on the price to go up. Hits the strike, you're in profit. Here, it's the opposite. You're selling the put and you're making the yield on the back end, which is really cool. As he said, look at the chart here. It's never hit strike, meaning you would lose. Okay? It's never hit strike, as you see. If it hit the strike, you would lose. Now, as he said, it's important to be careful here, because if you look at the Luna chart, and we take this Ichimoku cloud off real quick, you'll see that since February, of course, everything has went well. The chart's just gone up since February. So it's tough, but a really cool idea. So you just need to remember that it's slightly different than normal options. And I love the fact, like he just said, you can get paid to do nothing while the charts fool around and can't make their mind up whether they want to go up or down. He said crabbish, which is a great term. And if you don't know what that means, crabs walk sideways. All right. I like to simplify that by calling it Paul Walling, or sitting sideways, because everyone knows who Paul Wall is. Another term you often hear is hawkish or dovish, and that means hawks watch with a keen eye and they're ready to attack. But doves do the same thing with the keen eye, only they're always skeptical and ready to run. Different lingo that people may be not aware of that you're going to hear or see as this stuff progresses. It's only a matter of time, in my opinion, before very lucrative rich people come into this market and want to do the same thing that they do with their standard options on some DeFi stuff. It's only a matter of time. All right. It's only a matter of time before this stuff grows exponentially. Are the platforms that he mentioning going to be the one? Maybe, maybe not. Not really the point. Point is, it's only a matter of time before you see things turn the corner and you see big companies start to move into this kind of stuff.
Yeah, absolutely. And if you actually look at the options protocols with the highest TVL, and you can do this on DeFi Llama, they're the ones that are handling everything for these smaller protocols. So Friction and Katana, for example, I don't believe they run their own options. What they do is they use PsyOps or Psy options on Solana to do all that for them. And there's another large protocol, Theta Nuts. They use, if I remember correctly, Ribbon Finance to run their options. So there are these large options protocols that are actually not used as much by retail as they are by options protocols. So that's a pretty interesting data point. One other thing to know is if you're coming from traditional options and you're familiar with CSPs or CCs, generally speaking, in stocks, you're doing physical settlement, which means if you sold a covered call and it expires in the money, so the price expires above strike, you have to sell your asset for the strike price. You keep your premium, or if you're doing a cash secured put and it goes below the strike price and expires then you have to purchase the asset at strike price. With DeFi options, it's all cash settlement, which means if it expires in the money, you take a loss on your initial instead of actually purchasing or selling any assets. It's just simply your staked asset is going to take a loss, and that's it. So actually, could you pull up
which we'll show in a second here. Now, this is the call side.
Yeah.
What he just mentioned, you'll take a small loss. Right here, you see it. Minus 3.4%, minus 2.6%. It's not like you lost everything. It's just you lost that percentage of your initial deposit.
That's right.
Because these were selling calls and the price was going up. You wouldn't want to sell a call. You'd want to buy a call. And as you see, the price went up, you sold a call, you lost a touch of money. That's the way they play this, okay?
So yeah, actually, this is a great example because this was such a bullish chart in this particular time frame. So can you scroll to the bottom and see sort of like what it was? Yeah, so let's say 1%, 1.7 plus 9. That's
you were getting
2.
a solid
6,
right
6,
around 3/4 to 1% almost every time.
Yeah, so you probably lost everything you made though.
Flat, yep. Roughly.
Because it looks like you were like up about 6% and then it got wiped out in 2 weeks.
This is the thing.
That's one of the risks.
This is the game you play. Absolutely. With options,
that's right.
This is the game you play. There's a difference in, buying coins 1-to-1. Hey, you buy a coin 1-to-1, it goes up, you're good. Hey, you sell it, it goes down, you're good. The difference is when you go to options, these are derivatives, folks. This is what a derivative is. If you don't know what a derivative is a secondary bet on a bet. You were already purchasing something, so you're already betting, whether that's 1-to-1 or 1,000-to-1. I don't care. You bet it. You made a bet. Bet it is not a real word. Bet is though.
Should be.
So you bet on something to go up. Then you took it another step. You put it on a DeFi platform and you sold put options. Okay. Now you've made a secondary bet on top of a bet that is a derivative. Welcome to the 2008 financial crisis. Okay. That's how it happened. And this is how we have to be careful with what we're doing. Okay. You can't walk into this and think you're just going to be on top of the ball and be smart here. It just requires some research and thinking. So it requires you to use one of the 3 B's, your brain.
Hey, so one of the things that I will say is that the volatility for Luna is higher than the volatility for, let's say, Bitcoin or Ethereum. So while the CSPs, the cash secured put vaults for Luna, have the highest yield, you're looking at 40 to over 100% on Theta Nuts for similar strikes. For the Bitcoin and Ethereum vaults, you're looking at between 20 to 40%, which is still amazing on stables, but there is that added risk. So could you actually pull up the Ethereum put vault? So if you scroll to the top, I didn't send you a link for that. Go all the way to the top, and then click income, and then scroll to the bottom.
This is a very good percentage.
Keep going down.
27, 43, 41,
yeah, I know.
19.
But those are
covered calls.
Those are for covered calls. Yeah, but let's go down. Let's go to puts because
puts.
These should have been semi. Yeah, let's do Ethereum at around 30%. Because I believe Ethereum was kind of bearish under the same time frame. So click on analytics on details on the bottom. Click on the square. Yep. And then click on the analytics and details at the bottom. Perfect.
There we go.
Awesome. Okay, so So if you scroll up to the chart with the strikes.
All right.
It looks like there was only
did hit once.
Yeah, there was. It hit once. So actually, but that wouldn't have expired. because it looks like it went under the strike, but then came back up
before it flipped. Yes.
Expiration.
As you see what he's saying here,
Right.
there's 6 different dotted lines. All right. This is the length of the contract. All right. If you can get back over before the contract ends, you're good. Okay. This is what Nancy Pelosi is currently betting on. Okay. If you don't know this, Nancy Pelosi's options are publicly listed. All right. So she bet on Roblox, Disney, and a couple others. They're all way down right now. However, she took year-long options. So instead of it being a dotted line for a week right here, her dotted line is a year long. All right. So she's got time to let it play out. She's expecting over the course of the year for this to play out. And that's exactly what happened here, what you're talking about. This thing actually dipped under strike, but then got right back over right before it closed.
Yeah, exactly. So I believe all of these are profitable. Can you scroll to the bottom and see if that's correct?
Green, green, green. Yep.
Awesome.
No reds.
Yep.
So
All green.
that's 3, 4, 10, 10 and a half, 19, 25, 2.5%.
So again, Ethereum under this time frame was relatively bearish, and so what I'm saying is Ethereum is a less volatile asset, still a super volatile asset, but a less volatile asset. So the way that these options are calculated, the strike prices are calculated, is based off of, I mean, all of the Greeks, which I'm not going to get into, but effectively it wants to be below a delta of 3. So you're relatively safe in the profitable range. So if you want a safer, not safe, but safer yield on your stables that deals with options, clearly you can go with the blue chips, the bluest of the blue chips, which is Ethereum and Bitcoin. But if you're willing to risk it a little bit, or if you have your own market thesis because you look at charts, because you follow Keith, then you can play a little bit more risky. Additionally, if you want to actually buy these options and trade these options, buy them, hope the premium goes up, and then sell them at a higher premium, you can do that on Lira. So Lira Finance is a great place to experience what feels much more like traditional options, buying and selling options and flipping them at higher premiums.
To go back on what he just said here, not only are you getting your Ethereum back that you deposited, but you're getting all of your Ethereum back at a higher price because the price went up, and you're getting the 2.5% worth of gains that you see here. That's really cool.
In this case, these are actually cash secured puts, so you're getting those gains in USDC.
Well, whatever, right. No matter what, your Ethereum went up, and you're getting percentage on top of that. Really cool.
That's right.
No matter what, you're not only are you in the money because the price went up, but you're also in the money even more, the derivative part, because you bet on it and it did what you thought it would do, which is excellent. This gives you a chance to make even more than you were already making, which is awesome.
Yeah, spot on. So cool. There's one more protocol I want to talk about, just because people are sort of really excited about it, and I'm hearing a lot of buzz about it. So I just wanted to give a quick take on it and sort of explain it for people who don't know what it is. I'm not advocating, I'm not hyping up, I'm not suggesting you invest. I'm simply trying to tell you what it is because you've probably heard about it. And this is Deus or Deus. I want to say Deus because I believe it's going for like a godly theme. Deus Finance. So Deus Finance is a Frax fork. If you don't know what Frax is, it's a protocol that has a partially collateral backed and partially algo-backed stablecoin, which is Frax. I'm sure you've seen the Frax token. And DeFi, it's really big in the Ethereum network, and it's making waves sort of in the Avalanche and Phantom network as well. So Deus is a fork of that. So they have their own stable token called DAY, and then they have their own FXS token called Deus. Now, if you're not familiar with this mechanism, it's also very similar to how Luna and UST work, except UST is not also backed by collateral. So DAY and Frax are both mostly backed by collateral. Frax, I believe, 85%. I'm not sure what DAY is backed by, but the reason I'm bringing it up is because it is another opportunity to get a yield on a stable. So additionally, it's an opportunity to if you think that Deus will do well, you can maybe play that as well, but that's a volatile asset. Currently, I'm still a bit, I guess you would say, what was it, dovish? I almost said pigeonish.
Pigeonish is better. Let's use pigeonist.
Yeah, pigeonish. I'm still a little bit hesitant to jump into volatile assets. So I'm still mostly in stables, if not almost completely in stables. My actual portfolio will be published, I believe, this week. I'm building out a big tracker for it, so people in my Patreon can follow it, and you'll see that it's almost 90% stables right now.
Well,
but
same thing here. I do that for our Patreon members as well. The unlimited members get everything that I do. I'm highly in stables as well, so I'm right there with you. You're gonna have to convince me that everything is gonna go great, and I'm just again pigeonish.
Pigeonish. There we go.
Pigeonish.
So can we bring up the Beethoven really quickly?
No. Hold on one second. There you go.
So Beethoven, if you guys don't know, I know some of you guys follow Keith, and he's all about the charts and TA. If you guys don't know, Beethoven is a decentralized exchange, but it's way more than a decentralized exchange. Also, I believe it's also an AMM, and it's a very robust protocol in the Phantom Network. I think it has one of the highest TVLs in the Phantom Network, but you can do a whole bunch of stuff. Swapping is one of them.
330 million right there.
Yeah, 330 million.
That's a lot.
TVL. And yeah, so they're sort of known for having these liquidity pairs with 4 different tokens, and giving them fancy names. But in this case, we have DAY, which is a stable token, and USDC. So it's a stable pair, right? You have DAY and USDC, both worth approximately $1, and you can contribute these or LP these for scroll up for, I believe, 40% yield. Yeah, 48% APR.
Yeah, right.
Remember, that's APR. So if you compound your rewards, which are in Beats, and Beats is actually probably the most stable, almost I would never say bullish on a token that is used as rewards, because I feel like my heart would break or I would die inside. But it's one of the best reward tokens out there. And so as you're compounding this, you can bring that 48% up to rough math is going to say about 62%. So APY, if you're compounding relatively regularly.
So to pause you for a second, you just said you can make about 60% ish on a stable coin APR. Are you paying attention? APY. Are you paying attention, people?
Yeah.
Are you paying attention? He said at least 48% APR currently, because that's what it shows right here on the screen highlighted. That's a layup, everybody. That's a layup. Make your layups.
Now, if you think this is going to become an opportunity that people are interested in, I mean, they already have quite a bit of TVL. I think there was 1 million point something. Well, I guess it's maybe not that much. But if there is a lot of demand for this token, the DAY token, because it's partially algo, the demand on this token actually feeds into the price value of Deus.
Like we were talking about with Anchor last time, where if you have Anchor and you add Anchor, and then if you do it more, it pushes up the Luna, because Luna's partially.
Yeah, that's right. Yeah. With UST, that's right. Exactly. Yes. So any of these algo tokens, if there is buy pressure on the stable, whether it be Frax or UST or on DAY, it pushes up the value of its other sort of paired token. In this case, Deus. So if you think this will do well, Deus is a bet you could make. But I'm not gonna talk about it. I'm going to let Keith show us the Deus chart and analyze it himself and see what he thinks.
Okay, real quick, if you just look right here, what he's saying on beats.fi, shows you right here someone recently put 20 grand worth of USDC in. Someone recently did 5 grand, 5,800 worth of USDC and 6,300 worth of Beats for 12.2 grand 36 minutes ago, okay? Some people are withdrawing, taking profits, and that's fine because they see charts turning around and they're thinking, hey, maybe it's time to buy some stuff. Well, is that the case? Let's look at this one first, Deus Finance. This may not be the exact number. There's a bit of arbitrage in between charts. Bear with me, okay? If it doesn't come out to the exact number that we're talking about right now, relax. This is a day or so behind when we record this, so don't get your knickers in a twist, as they say. There's a lot of arbitrage. We found different prices between 340 to 370, 360, 365. So it's bouncing around right in this range. Good enough for me. So if we go back to the chart here, quickly looking on a daily time frame, this thing has gone up far beyond what I would have thought it was going to do. It's sprinted really, really far over all the pivots, blew right through everything. As far as an 821 crawl, she got that way down here on March 6th, damn near 3 weeks ago. Excellent. You could have got this at 3 weeks ago at $43. It's $350 right now. You don't have to be a math genius to know that's about 700% increase. Titties. Okay. That's beautiful. Currently, it's fallen under the AEMA. That is not a sale yet, but that is into the wait a minute zone, which is
wait a minute. That's
right here. Okay. And I'm going to get a better color here. If something falls in the wait a minute zone, what should you do? You should probably just wait a minute. It's not rocket math. Okay. RSI on it, starting to trend down. Obviously, went super overbought right here, double tapped overbought. That typically makes me non-pigeonish and turns me into dovish, okay, or bearish. I'm definitely seeing that should have sold off some right here. Now, can this improve? The answer is yes, it can. It needs to hold that 50 line right there when it starts to rescind more, because it's likely to rescind more. If it doesn't go down farther, we're going to get another overbought, which is going to push us farther into a bearish scenario. And I don't want to see that happen. I prefer if things were slow and steady on their increases instead of shooting up really fast. I know that feels good short term, but I don't need to explain to everyone who is in strong block that it feels real good when it's going up, and then you're now thinking how bad it feels as it comes back down. Slow and steady wins the race. Okay, can only explain that a bazillion times for people listen. Do I think this is going to come down some? Yes. How far? Well, we can pull a fib on this and see. We're not anywhere close to a major Fibonacci line yet. It looks like 240 and 160 and 114, all fair as good targets. Matching the RSI with that would be somewhere around 240 first. That would be a fair target, but that would assume that it's going to fall under the 21 EMA and throw me a legit sell signal. Okay. Doesn't look super amazing. I think this had one hell of a run, and because of that, it needs to take a breather. And I don't think anything's wrong with that. That would just be literally a breather. Okay. We'll see how it progresses. But currently, this chart rolls over and starts to play dead like this. That immediately jumps out to me as take profits. It's really close to it right now. I mean, I probably would have already taken profits had I known about this a month ago. All right. That's just the way I look at it. We talked about other stuff first, and Luna's been big right now. We were going to talk about Luna, so I already have that pulled up. This is a solid outperformer from everything else. I actually thought this would go bearish here, and I thought we would have a head and shoulders. Sure enough, Luna shut me up. Okay, head, shoulder right there. Okay, thought that would happen. Didn't happen. Held the short-term trend. Is creating a rising wedge. If it can break somewhere around in this level right through here and break that rising wedge, we'll get more up. Okay. If it doesn't break that rising wedge and it continues to fail to make a higher high, which it kind of made a very small higher high, now it's kind of jogging right now, very, very touchy at the moment, we'll see a failure. There is an inverse head and shoulders here. Shoulder, head, shoulder, a clear established neckline. Can't deny that. I'd love to see this succeed for everyone, okay? I think that would be wonderful if that succeeded for everyone. However, be smart here. This thing is sitting right in Sniper's Alley. And when something's sitting in Sniper's Alley and holding, good. If it fails, it's going to $82, and it'll also break this downtrend line. What does that look like when a downtrend line breaks? This is why I chart stablecoins, because stablecoins have been doing just that. Same thing right here on USDC. This is almost a dead mirror image of the Luna chart. You see that Luna right there? That rising wedge, a little bit of a triple top. USDC, exactly the same. Okay. The wedge failed, and now it's drawn down through it. I'd hate to see that happen to Luna, but Luna has been a top performer, and it's fully in the cards for that to happen. That would invalidate a head and shoulders to happen.
If you don't mind, if I step in for a second, I wonder if the reason Luna trends with US dollar or USDC is this the amount of stables in crypto?
This is just people. The way I gauge this is people.
Right.
People becoming more bearish and jumping out of assets because they're scared.
Yeah.
And they're moving into stables. Okay. Plus, like we've talked before, they offer great incentives to stake stables these days. You're going to get great yields on free stables that you're already going to go to stables anyway because you're getting worried, right? So you're able to offer free stuff, and then It's a good incentive. Now, those incentives will slowly drop over time, though.
So my wonder is, if Luna in particular is trending with stables because Luna goes up when more people are putting stables into Anchor.
Wonderful question. Now, is that to bear? We're going to see. We have a UST chart as well, which is the Luna peg that he's talking about. Not the peg, but the pair he's talking about. And as you see, this thing outperformed everything else. This is UST on Anchor Protocol.
Oh,
good God, look at
that. You're not sharing your screen.
Well, now I am.
My bad.
There we go. Perfect.
Yeah. Oh,
we have brains, but we don't always use them, folks. Yeah. UST blew everything out of the water here. Okay. This thing has gone far beyond. It's owning 3/4 of all of crypto's market cap right now. Jesus, folks. Okay. So a lot of money moved into it. Now USDC is 2.4%. USDT Tether is 2.3%. I expect slowly that UST will creep up to those levels, but I'm going to be real with you. And most people don't know what UST is. And because they don't really know what UST is, it may take some time. But as you see, this thing has done nothing but perform. Nothing but perform. I think partially that's due to the high yield they offer for staking stables. Don't get me wrong. Anyone who can make free money is going to take that. Now, their borrowing platform is important, as you mentioned before. Their borrowing platform is crucial. The more people who borrow, the more stability their platform has. You need people to borrow. And as charts begin to turn around here, I believe you're going to see people move out of that UST and use that UST to borrow with, which is going to rise the APY that they offer because more people are coming out and not going into the stable, which is awesome.
Right.
The more people who use it, the better. I want to see this stuff go up. You got anything else, brother? It's been about 30 minutes.
Yeah, I mean, I could talk to you all day, but
honestly,
yeah,
we could do this all day long, but I try not to, right?
Yeah, I think we've had hour-long chats definitely before. So yeah, let's leave it there. I thank you so much for charting those for me.
Thank you.
And yeah, so if you guys are, again, if you're interested in options protocols, I always hype up DeFi Llama. DeFi Llama is an amazing website. It's not a protocol. It's not an investment opportunity. It's literally just an informational resource. So DeFi Llama, click on categories, click on options. You can see all of the options protocols by TVL. Generally speaking, higher TVL means more trustworthy. There are very few exceptions, and so check the audits if you want to. But there you go. Deus Finance is on Phantom. I'm not shilling it. I'm literally just telling you it's an option. Keith said it may be overbought right now, so clearly I'm not saying jump into it. But it exists, and you can get a stable yield on Day USDC if you'd like.
Yep. So all the stuff that we talked about will be in the description of the videos. I'll have this all linked up. Steven's going to do the exact same thing. He'll have everything linked that we talked about here. So all you've got to do is just scroll down to the comments and the description down at the bottom there. You can click on everything we're talking about. If you have questions, feel free to jump in the Discords. We both have a Discord. We're in them all the time talking. We share information. That's how you make smarter people, folks. That's how we all get smarter together. Now, y'all need to grow your beards a little bit bigger. So you can be part of the cool club with us. So thank you, Steven. Thank you, everybody. We'll be back next week. Y'all be good. One more.
One last thing. Yeah, one last thing. I will say, and I take no credit for this, but the people in the Discord were talking about Deus Finance before it was popping off and asking about it and hyping it up. So if you're the sort of person who buys the rumor, being in the Discords just helps. It doesn't have to be my Discord or Keith's Discord, but being in the Discord on the ground level, where people are actually having these conversations about these new protocols, and sometimes buying those rumors can really be beneficial. Had I looked at Deus when I first heard about it,
mentioning the same thing, someone in our Discord brought up Luna months ago. I was bearish, so I put everything in stables. Aha! Keith is not so smart, everyone. There you go. So you don't always win everything. You don't always win everything. You can't possibly have your hand in every fire. Okay? So
it's true.
Play it smart, everyone. All right.
That's all I got.
Thank you, everybody. We'll be back next week. Y'all be good. Peace.
Cheers.